Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. What a move we saw after NFP. My dear friends, dollar jumps after monster job report. The dollar jumped on Friday after data showed that US employees added significantly more jobs in January than economics expected, potentially giving the Federal Reserve more leeway to keep hiking interest rate. And as a result, we saw massive recovery on the chart of DXY as well. DXY closed at 102.99. This is the last traded price of DXY. Another news article says gold plunges as surge in US employment sends the dollar and the bond yields higher. Gold was sharply lower on Friday as an unexpectedly robust rise in US employment last month sent the dollar and bond yields soaring on expectations the Federal Reserve will need to continue raising interest rates to slow the economy. You can see the US added 5,17,000 jobs in January and the expectation was only 1,87,000. So it was a huge difference. So as a result, we saw massive candles on the XY and sharp fall on the chart of gold. So my dear friends, these are the levels for Monday. So let's discuss one by one. First of all, if you're thinking that is this a trend reversal, then to be honest, we do not have any confirmation yet. Because if we look at the market on a higher time frame, see this is the daily chart, then on the daily chart, yes, it looks like a trend reversal. But still, I think that it is too early to be sure because in the coming week, we may see market taking support and bouncing back as well. So it is too early to predict that this is a complete trend reversal on the chart of gold right now. Okay, so as a result, it's better to be on the safe side and trade from level to level. Those who have been trading for last couple of years, for the last at least 1 year to 2 years, they will probably remember the importance of the level of 1790, and probably we will see the level of 1790 again if the selling continues on gold. Here you can see that we have a good support zone around 1790. But the thing is 1790, 1780, this particular level is too far away. So as a result, we took the help of Fibonacci to determine what are the possible support on the chart of gold right now. So once we have drawn the Fibonacci from this particular point here, we saw market respecting the Fibonacci's. So on Monday, first of all, observe what the market does. Market opening will be very important. If market goes up after the market opening, do not take a buy position. It will be very risky. If you're an experienced trader, if you have been trading on gold for last couple of months and years, then that's your personal choice. But if you're a beginner, then be careful after the market opening. If you see market going up, from this particular level here, then observe the market around 1884 to 1885, because around 1884 1885 we have a minor resistance, very minor weak resistance. If gold reverses from 1884 to 1885, if you see market reversing, showing price rejection from above, you can consider a sell position. There is also a chance that if market tries to recover also, market may reverse from the 200 moving average, because usually 200 moving average is considered as a very stable support. But because of news yesterday, market broke the support. But next time when market will be going higher, the same 200 moving average may act as the resistance. So 1884 1885 is the first resistance, but before that we have also 200 moving average around 1875 76. If market reverses, you can go for a quick sell, but follow proper risk management. Okay, and in case there is a good recovery on Monday on the chart of gold, then the second selling opportunity will be around 1898 to 1903. The reason behind considering this particular level is Fibonacci 38.2% retracement level plus we have seen good support in this area previously. Okay, so as a result, there is a high chance that Fibonacci plus previous support will act as the new resistance. So 1890 and 1903 will definitely put some pressure on the market. And if market reverses, if bulls surrender and sellers start dominating again, you can consider taking a sell position if market reverses from here. So these two are the selling opportunities that I see on the chart of gold right now. And in case market starts falling after the market opening, if you see market going down, then yes, you can take a sell position below 1862. You can take a sell position below 1862, but be careful because already market has shown extreme selling. So taking a sell position at retracement, at pullback, or buy at sell on rise will be a much safer and better opportunity instead of taking a sell position at breakdown. Again, I'm repeating because already market has shown extreme selling on Friday. So sell on rise is much better and safer trading strategy. Okay, but in case market doesn't go up, you can't do anything, isn't it? If market breaks 1862, yes, you can take a sell position, but be careful. Be careful. The next support, okay, the next support on the chart of gold will be around 1840 to 41. But to be honest, I'm not very sure whether this is a good support or not, because after this kind of massive selling, nobody can be very sure that this is the support. See, this is the harsh reality of the market. After all, we do not run the market, isn't it? We can just try to predict where market may take support, where market may face some resistance, and act accordingly. But market does not listen to us. Okay. So if market comes down to 1840 to 41, this can be your first support. Why? Because of Fibonacci 61.8% retracement level. Here we could see the market just closed at Fibonacci 50. So definitely we can expect under normal circumstances, market will respect 1840 to 41. If it does that, you can take a buy position. If you see market taking support, market trying to bounce, you can look for some support around 1840 to 41. In case it does not, if you see market is coming to 1840 but big red candles, then obviously selling pressure is too high. In that case, you do not need to take any buy position. And your next support will be around 1830 to 1824. If market takes support because of previous price rejection around this area, you can look for a buy position. So these two are the only supports on the chart of gold right now for Monday. 1840 to 41 and 1830 to 1824. 1830 to 1824 is a big zone in the market, but can't help it because usually support and resistances work as zones in the market. Okay, so these two are the resistances and these two are the supports on the chart of gold right now. Okay, and if we look at the bond chart also, bond chart has also shown considerable upside on Friday. And my dear friends, if you are looking for signals mostly, then please watch the next part of the video where I'll be talking about chart prime. But keep in mind, my dear friends, this is my analysis. I can be wrong as well. No trader is 100% accurate. So please follow proper risk management. Do not gamble with your hard-earned money. Keep in mind, capital protection should be your first priority always. Bye-bye. Take care. A big shout out to Chart Prime who has sponsored the today's video, and Chart Prime is also one of the best custom indicator service in the trading world right now. Chart Prime has been designed for serious traders only because along with buy and sell signals, you can also use the available tools on Chart Prime for additional confirmation. This is the 1 hour chart of Euro USD, and you can see there are various signals generated by this tool. Possible reversal up means you can go for a buy position. Possible reversal down means it's time to go for a sell position. My dear friends, no indicator, no trader is 100% accurate in the world, but Chart Prime is really doing a very good job. So if you follow proper risk management, then yes, sky is the limit for you. Personally, I have been using Chart Prime for a few months and their result is very, very good. And along with all the tools of Chart Prime, they also have a community on Discord where they post regular trading ideas. And the best part about Chart Prime is that their rates are very, very reasonable. In fact, less than half in comparison to the other service providers in this trading community. So, my dear friends, initially you can simply go for a 1 month subscription and try out the product yourself. Backtest, use it, okay, and just see. I'm very much sure that you will love the product. I'll add the link in the description so that you can get additional 30% discount. Okay, you can also scan the code on the screen for faster registration. Make sure to check them out.